Hello and welcome. Today we have Samir Arora, founder Helios Capital, with us to decode the outcome of Lok Sabha post 2024. Hello, Samir, and welcome.
Hi. Good to see you.
The way markets have played out now to the Lok Sabha poll outcome, would you term it as a knee-jerk reaction, or this is one direction now, up and away?
I don't know what up and away, but it's not a knee-jerk reaction. It is a significant event in our market. And for the last many months, at least foreign investors had been nervous for whatever reason. I was not nervous, even though I'm also a foreign investor. But people were nervous, and you could see that in the flows. But more than that, because the last 10 years have been good in terms of visible progress on many areas, infrastructure or housing or power and things like that. And there were many sectors that have benefited. So if you continue with the same management, in a sense, or same government, it does let you continue with that. Plus, in the meantime, the rest of the world is also doing well. So it's not that India is only doing well and the rest of the world is doing badly. So why are we standing out? No. Therefore, this can go on like market normally go up. So it should go up.
So while you say this is not a knee-jerk reaction, your very close friend Shankar Sharma has a different opinion. It says that budgets and elections have a very, very fleeting impact on the markets. Would you like to counter that statement?
No, I totally disagree. It's like saying that wars have a very small impact. If you look at it over a 10-year, 20-year period, then you will see, a war aaya tha, who cared? Yeah, election aaya tha, who cared? But actually it matters. For example, if in this election, the BJP had not won, as in not won at all, that means no government. How much do you think the market would have fallen? My guess would have been that it would have fallen 20 to 25%. And then from next day, it'll again slowly start going up, and it'll take you 2 years, let's say, or something like that to recover. So is that not? But if you look at over 20-year period, it will look like, how did it matter? It was a correction which anyway happens. These things matter. Also, like last few days, PSU stocks have been going up. This has happened randomly. It's not happened. Nothing happens randomly in life. So these are easy things to brush off and to say, but these things matter. It's like saying war doesn't matter, but when you're in the middle of the war, it matters. Not today. If you look at World War One, you may say, "Arey, World War One came, but the market you see long term has always been going up." But on day three or month one of the war was mattering a lot. And anyway, what else will you do? Because the stock selection is influenced a lot by backdrop and macro. I remember these interviews 2 years ago from all these big PMS guys in India saying, we don't care about the macro economy. We care only about our stocks and we care about bottom up. And then why IT sector underperformed? What did it had to do with macro in the US? So all these things matter.
Has the base been set higher for the markets now? And even the expectation from the markets in terms of delivery, have they been set higher with this bull run we've seen in the past 1 or 2 sessions?
So I would think that the return expectations are not supposed to change because the returns depend on corporate earnings. Of course, depending on the policies, you may say a government will prefer this sector or that sector, this or that, but big picture aggregate corporate earning growth, mota mati will be in the 13-15% type number, which has always happened. So if you go up too much, then you'll have to give up in the end later on someday. But the bottom may have been raised because my logic is that normally we have both FII investors and domestic investors, like last year, where foreign investors put in $21 billion. And mostly, unless the world is in a bad shape, they put money into India. In the last 20 odd years, there have been only 4 negative years. So generally, their default is to buy. Now, this year, they actually haven't bought. They are down some 3 billion, I think, year to date, calendar year to date. That number is going to become positive in my mind. As I said, one is Indian news is out of the way, or if they thought that is negative, which actually would have been. Second is that the world is doing well. Third is naturally, India has also done well beyond elections. India has been doing well, and it's become a too big a market to just say, I don't care. Pehle kya tha, even though Indian market was doing well in the past, somebody can say, I know, but it's too small for me, and I can, buy something else. Now India is the 4th biggest stock market in the world. And if it does well, like it is generally, you can't just randomly say, I don't listen to it, I don't focus on it, it's not my area. So ये सब करके you will see that the FIL come back. The domestic guys are anyway getting a lot of money, including us, by the way, now that we are in the mutual fund space. So if both the legs are there, if both the angles are working, that FI is also wanting to buy domestic or what, you will, in theory, have a higher floor, or at least it will not easily be going down from that.
So one of their concerns was the steep valuations, Samir. How would you justify that then?
I disagree with that, because you tell me big picture in the last 4-5 years, 3-4 years, sorry, since 2020, which consumer stock has massively done well, which IT stock has done well, which financial stock has done well. Well, valuations are up because ABB has gone to 90 times and Siemens has gone to some 70 times. So, mat kharido. If you rank 150 stocks on valuation and you find that 40 of them have become very high, don't buy those 40. My point has always been that every day of our life, some 1/3 of the market is looking attractive based on everything. And some 1/3 of the market does badly. Because it is a market where you are supposed to move. For example, we never in our life bought PSU stocks before. But in 2020, we bought State Bank of India because it was very cheap. And in 23, sometime we bought HPCL because it was looking like, yeah, 4P. And at that time, the other low P stocks, which I had missed. Like I missed the other PSUs like these. Other than Bharat Electronic, we never bought the other stocks. So we said, ab kya kare? We need a PSU because there is an angle where top down, they are doing well because the government seems to be focusing. It was not so much ki defense stock is doing well because there's a defense order being given, but that literally every PSU across every sector was doing well. So what was the common link? What we thought at that time, we don't even know till today whether it's true or not, that the government of Mr. Modi personally was talking to these guys in groups or in whatever and saying that, hello, I am your large investor and we need returns and you go and expand, go and compete with the private guys, whatever. So it was not he's only doing it with one sector or the other. So we said, let's find something which can be reasonably. So at that time, and even now trading at 5-6p. If you look at HDFC Bank, is trading at all-time low, this thing. So can you not that every stock is low, but you can find enough to make a 30 stock portfolio or a 35-40 stock portfolio. So it's okay. But the thing is that if you look at the overall market, not the mid-cap stocks, look at the NSE 500 index. So how much do you think NSE 500 is up over the last 5 years? It is up some 17-18% per annum. Okay. How much would our Indian earnings have grown? Maybe 15%.
On an average, yeah.
तो आपको चलो 3% एक्स्ट्रा हो गए, 5 साल के लिए एक्स्ट्रा हो गया, तो आपके 10-15% वो हो गया, ओवर वैल्यूएशन हो गई from whatever is your theoretical number. That is at the with every weight being as it is. Now you mix it a little bit, you can get back to a slightly lower valuation by not buying some of the absolute highest valuation. घूम फिर के it's not so wide that you will lose money only on that basis if the valuations are high.
So which
But
pockets?
you're not supposed to. But one more thing, you're not supposed to get a market only as very cheap. But very cheap will come in 2008 September, 2020 March. But then you don't even know it's cheap because the outlook looks very scary.
Okay,
So
now that
it's
you
okay type
actually
of market.
now that you
It's
compare,
okay.
now that you bring 2008 and 20 into the picture, is this election outcome something like a 2008 and a 2020 moment for the markets and for investors to go all in for the next, let's say, 5 years or so?
No, it's not like that because the valuations are not low. That's the thing. It's not that valuations are cheap. Your question is, are they so expensive? And particularly on every stock that you can buy, not ki, some stocks are maybe expensive, that it itself is a drag and that you will lose 3 years of earnings because your valuation will adjust. No, what I mean is, half the time the market is in okay territory. Okay territory means you will only make as much plus minus as the earnings. You will not get extra return because you came in cheap. Neither will you lose 5% per annum on the basis that your starting point was very expensive. Mota Mati, it is in range. Now, how do I say it is in range? That if you look at the last 5-year returns, last 10-year returns, last 15-year returns for the index, which is NSE 500, they are broadly in the 13, 15, 16% range. Okay. If you look at last 2 years return, which means calendar 22 and calendar 23, even if you include 24, it won't change much. But if you do calendar 22 and 23 only, the market in those 2 years was up combined 30%. It was up 4% in 22 and some 24, 25% in 25, in 23. So 2 साल में 30% बढ़ा था, which is 14-15% per annum. Even if you want to include now that 5 months are over, right now the market, because today and yesterday has gone up, but otherwise some 12% in these whatever 5 months, 6 months अब शुरू हो गया. घूम फिर के last 2.5 year returns are also in the 15-ish% per annum. So how has it become more expensive? Our earnings have grown 15% per annum. It is that some things have become visibly expensive.
Correct.
But the things which are not working, one of them we also don't like, which is IT. Even we don't like.
Okay.
And it is not done well, but we also don't like it. So I can't say it has become cheap, so buy it. We are not buying it, whether it's very cheap or not. But financials, what is wrong with them?
In
And
fact,
even consumers, some of them.
talking about financials, Samir, you also recently launched something on the financial financial sector thing. The Nifty Bank also hit 50,000 level for the first time on Monday following the exit poll outcome. You expect this euphoria to continue, and then what's your justification of launching
First
this?
thing is, it is financial sector fund we launched because we want to do what we believe in. So if you see our general portfolio, which is the flexi cap in India or my fund abroad, mostly we are always overweight on financials. And financials today has become bigger than just banks. You have banks and wealth managers and brokers and NBFCs and everything that you can find, including infra financing, whatever you want, you can find. If you look at the highest growth in sectors, it's mostly in the financial sector. If you look at the fact that for the last 2-3 years, which stocks have not done that well as a sector, is the financial sector. If you look at the number of billionaires in the world, from the Forbes list, the highest number of billionaires come from the finance sector. If you look at the US 400 richest Americans, is another Forbes list, only of Americans. Even there, the highest number of billionaires come from finance sector. Finance sector is generally done well. In the last 2-3 years, some big stocks haven't done well, like HDFC Bank and Kotak Bank, which makes the whole sector as if it has not done well. It does well. And also it is psychologically easiest to buy because the stocks are well known. The companies are well known, their corporate governance, etc., mostly good, but they haven't done as well as these other, PSU stocks and defense stocks and all that. But long-term history is good. So we like it from all these angles. And main proof of the pudding is that we ourselves in a fund where we can buy any sector. Our highest weight is in the financials.
In the financials, yes. Okay. So if there is a list of likely disappointments for the markets in the next few months, what all things according to you would be on that list?
So I run a long short fund unlike the guys in India. So my logic, which is working this week also, is that the stocks that will do well are the ones which are policy driven, government intervention or reform driven. And that's why you see these PSUs doing well. Second is government's focus is on maybe manufacturing and PLI and all
Infra,
that. So that
infra
and also infra. Some of it we don't like, some of the infra we like. Like L&T types we like, but we don't like these contractor types which are dependent on government orders and L1 and all that. And the things which will not do well, A, because they were already not doing well, and B, there is no connection with the government. And number one is IT. Relatively. In the end, if the whole market goes up, IT may also go up, but we are talking about relative underperformers. And second could be these expensive consumer staple type companies, because even if, what will government do? Government can't directly do anything for those, because it's not so much to do with the fact that the poor don't have money. I think their priorities have changed. If you give them money and say either you upgrade your sabun or your noodle, or instead you buy a a smartphone, or you buy data, or you do something flashy for Instagram, and which one will they do? They are also driven by the same aspirations and the same stuff. So sometimes it may not be ki, arey, they don't have money to upgrade their soap. They think, who's seeing my soap? Let me do something which is more visible to the world. Even we are doing it. I'm wearing my new specs for you. Otherwise, I was okay with my old specs. So everybody's doing that. So it's basically the change in the basket. It's not so much that poor are waiting for rain to upgrade their soap, which is what this story has been sold to us for the last many years. When there's rain, they will buy a better soap and they'll buy better noodles and they go to organize. They would have, but now they want something else, is my thinking, and also many people's thinking.
So these are
So
more
they
aspiration
think that
driven.
the consumer, because of aspiration, IT, because there's no connection with government and budget and priorities and policies, and maybe pharma types, which also we own. But I'm talking, if you say right now for the next 2-3 months, who's interested in these boring things? We are interested in government policies, liberalization, opening up, putting new sectors in GST, put gas in GST, we don't know whether all that will happen. Value unlocking, real estate monetization, those are the current excitement. Now, one more thing I must say, on the budget day,
Exactly. So that was my next question.
there
Is it more
should be no capital gains messing around. Rest all is good.
So is that the biggest worry for the markets and foreign investors like you, that the government may tweak the capital gains tax? Although
If they
the
tweak,
current stand is not right now is that they won't, and there
if
has
they
been a
tweak it,
clarification on the
then
part of
the
the finance
foreign
minister as well.
investors will tweak the market.
Pardon? Can you please come again? You said what?
If you tweak the capital gains, then the market will be tweaked because it cannot be handled. It is too much of a cost, which is not there in any other country in the world. The world has only some 200 countries, and not one country in the world charges a tax to foreign investors. But now in India, you can't say only for foreign investors, it's not there, because that is not the policy or the framework. Therefore, it should not be done for anybody. But if you see, for example, if you invest in the US, they don't charge you capital gains tax, even though to their local means to their own population, they charge a very high capital gains tax. Same thing in UK, same thing everywhere else. But they don't do it for foreign investor, because of the difficulty of charging tax to foreign investors. For example, if my fund is investing in India as an FPI, the investors in the fund are not filing taxes, the fund is filing taxes. So the fund pays taxes in India, but how to connect it to those underlying guys? Because in theory, if I'm running an ETF, every day somebody comes in, somebody goes out, the tax is not paid that day, the tax will be paid at the end of the year. Or suppose today I'm making an unrealized gain. So in theory, the guy who redeems today has to pay because he's leaving, even though we are not selling. So we charge him, or we give him a tax deducted NAV. But after 3 days, the market falls. And so in the end, we don't pay capital gains. So we have cut tax from one guy on that day, because the day he left, there was an unrealized gain.
Okay.
And you also can't do that. No, you can't charge on unrealized gain. You should charge on realized
Realized
gain.
gains.
That also you can't do, because the guy who redeemed did not pay. A guy came one day before. I sold something which I had held for 9 years. Suddenly all that tax goes into this new guy's account because he was there on that day. So how can it be done? Therefore, the world has accepted that don't charge these guys. Now in India, they charged it. It was taken as a cost of doing business, but it ruined everybody's returns a little bit, because the index does not take all these things into account. So everybody started doing badly, little bit badly versus the index than before. Now, up to a point, they can still handle it, but you can't do these things. It's not the way.
That's tax terrorism, then, in your opinion?
It's a terrorism word we don't use because we are trying to appeal to the good sense that why blow up
Okay. Okay.
so
So
many
assuming,
other
let's say,
good things?
the budget doesn't spring any negative surprise. Okay, we have a very stable government, likelihood of a stable
Stable
government for a
government
period.
is already there now. What is the
Yeah,
confusion?
yeah. So does it change things for the FIIs in terms of how they
Yes.
look India
No,
in
that I
terms of
think would have
an
changed before
investment
budget
destination
also.
within the emerging markets, and let's say their allocations to India? Do you think they'll increase vis-a-vis?
100%. Because it's not that every day or every year they decide, should we invest in India or not? Normal is to invest. So how do we know that? You look at the last 25 years of data and say how many calendar years were they negative? There have been negative 4 years. 2008, so logical, can be justified. 2011, when we had the taper tantrums. 2018 was, I forget what was the specific reason, but we had a bad ILFS and all that, but I don't know about the world. And 2022, when US interest rates were raised so much, 600 basis points, and there was a Ukraine war. So that is it. This year, they have sold some 2-3 billion. So that I think 100% will be covered up in a few days, maybe. It's only 2-3 billion. So the point is, their natural thing is not to be on the edge and saying, ab hum kare ki na kare. Normally they invest because they get money. So they have to put, it's like we buy HDFC Bank because our fund gets money. So they will buy. So that part is there. Now to get extra, now we have done the things. We have political certainty, continuity of reforms. You can see the progress. And we have not had investments for the last 6 months from them. And और क्या कह सकते हैं यही है और that China also had one rally which has petered out. So anybody who was waiting, who says, although all these guys will say, we don't time the market, but effectively they're timing the market.
Okay. So
Okay.
broadly, should investors brace for more volatility in 2024? And will the intraday swings get bigger in terms of absolute numbers? Because we have the
That I
budget
don't know
now,
because
following it up with the US elections as well.
US election. I don't know because I don't know in my heart of heart whether I think Trump will help my market or not my market, their market. And then, but I'm talking about volatility. There is one angle left, which I am also supporting, which is that you have to clamp down on this F&O. So how to clamp down? Because you can't make rules. All you can do is increase margin, increase the size of the contract or something, or say that it can be only done by qualified buyers who have some 50 lakh income or asset, something. Because it is totally out of line with any logic that in the rest of the world, the data, I think, is some 3-4 times, something, I forget the units, but it's 3-4 times the cash market. In India, it's some 200 times. But 3 ka 8 or 10 or chalo, theek hai. This is gambling of the highest order. And although you may say it's their money, how are you concerned? You can say that for cigarette also, it is their money. Sorry, their health.
Yeah,
Why are you concerned? So ऐसे नहीं होता ना. There is a societal thing that because you bloody will lose so much money, you will bring down my whole system.
What if
Or
the
that
F&O, what if the F&O traders were to be taxed a little higher in the budget in the West?
something. I've seen tax also is a
Equilibrium.
more difficult thing to do. And we don't encourage tax because tax एक का बढ़ाया दूसरे का तो आप कहो कि contract size बढ़ा दो ताकि the guy's got money. Second is आप उसका वो करो that he is financially XYZ, like a qualified investor. Or you can increase some STT type, something on that. I think that will happen. Plus, because not only that I am dreamt of it, SEBI chief has said, finance minister has said, secretary finance has said, and it is logical.
Okay.
So it'll happen maybe after budget.
So as a strategy, should one stick to the large caps or are mid and small caps also an enticing proposition right now?
No, that is too difficult. It is always a mix and match, some part for stability and some part for the kick. You can't have it totally. These very young, very new guys who putting in his first salary can buy whatever he wants. But if you have some money, you can't all put it in just one. category. So that way the flexi cap equivalent, which means you have large cap, you have mid cap, you have small cap, is the best combo in whatever way, whether you buy it with different funds or one fund which can do all these things. But it's not very clear that you should only buy small cap because they have done too well relative to the large cap. And in the end, these things converge. If you look at from 2000 to 2020, that is 20 years, the small caps and mid caps underperformed Nifty. So that means there were ups and downs and cycles, and there was a 2014 massive year, a 2017 massive year, but a very bad year, 2008 or 2018. Ghoom phir ke they underperformed. But in the middle of the cycle, at some point, maybe at the end of 17, you would have felt that mid caps are massively outperforming. But these things, even if you see in the US, it's the absolute opposite. That in the last 4 years, the large caps are massively outperforming the mid caps and small cap because of these IT stocks, the big tech stocks there. But you do previous 20 years, same performance. So that means these things are very small difference. And so when the difference is very large, you have to bet the other way. Because the very large then comes back to normal.
So as a last question, would you like to stick your neck out and give us a theme or a sector that could surprise us positively before the calendar year 2024 runs out?
So my thinking is that at the first level, this budget, the government, the elections and the budget lead to natural outperformance of the government-related stocks, which is oil and gas, defense, and PSUs. But some of them have become expensive. We also own some of them, but they have to be matched with really significant policies. And hope that so many changes have happened. In the end, if these stocks go up a lot, whatever government does will look not enough.
Okay.
Therefore, my second level is financial, because they are okay on their own also.
Yeah.
They're okay on their own. They've been around forever. They have not gone very expensive, but they are not like IT. They are not like pharma, that they are not connected with my Indian growth or Indian policies or Indian reform. They are connected, but they are not expensive. But they are one level connected below the direct. कि आपने ये reform कर दिया, you put that in GST. Now, wherever a direct reform happens, okay, those stocks will continue to do well. But you can't do so many reforms in so many areas for every PSU to. Let's see. That is the thing.
Thank you, Samir. Thank you so much for your time today. We hope to catch up with you soon again. Thanks.
Bye.